All right, we are live. So yeah, welcome guys. See, there's already quite a few people watching. We're gonna give people time to come and join us. Give it a few minutes as usual. Just let some people come in. Hey, Ace
Yep.
Options Trading, welcome. See your comment there as well. So yeah, so Aaron saying just trying to learn all that is learnable for when I'm ready to start creating semi-passive income for retirement. Well, that's what theta trader strategies are all about, right, Lance? That's
Yeah. Yeah. I try
selling.
to give a lot of different. Try to give a lot of different strategies. If you've seen any of the other live streams I've done, I usually go over one main strategy from options and then show how it can help with your passive income in retirement, or
Yeah.
not even retirement.
Just extra money, always good. It's always good. So yeah, just seeing if anybody else is joining. But for anybody that's watching that hasn't actually tried our course yet, Lance and I put together a course probably a year or two ago now called "Win 90% of Your Trades in 90 Seconds." I'll post a link for that in the comments and in the description. If you're watching the replay, it'll be down there. It's a really basic course, but it's well worth doing. Lance put some videos together, and we've kind of put it out there. So definitely check it out. I'll post the link in the chat right now. But if you're watching the replay, it'll be in the description. Because it's definitely worth checking out. It's an email course, and you get emailed like every few days. You get like an email with the sort of lesson for the day, and it's been pretty popular over the last few years. So definitely
And
check
it's
that
free.
out. Completely free. Yep, totally free. All right, shall we get started on tonight's topic then? So I was excited to see in January, Lance made about 10% on his trading account, just trading this type of strategy. And we're going to go through some of the different strategies and protecting profits and limiting losses. So this should be pretty interesting. Lance always does a good job at presenting, and I'm excited to hear what he has to say to you guys tonight as well.
Yeah, this is a new strategy that I've been implementing the last few months, and it's in a way a little bit more complicated than some of the stuff I do, but it's also pretty simplistic in terms of having this protection that you'll see shortly. Feel free to ask questions in the chat. I do have some breaks in the presentation for questions as well, so ask them as they come in. All right, can you see my screen?
Yep, everything's good.
All right, so I'm Lance. I'm a full-time science teacher, and I also trade options to supplement my teacher income. I primarily sell options for income, and then I look for ways to make some extra capital gains. So when you're selling, say, a cash secured put, the maximum amount of profit you could get is whatever the premium you initially took in, and then if it expires worthless and goes to zero, that'll be your max profit. But I'm looking for other ways to supplement that with capital gains. One way to do that is by selling a covered call. Let's say a stock's at $50 a share. You could sell a 55 covered call against it. And then if the stock goes to 55 or higher at expiration, you would make that $5 difference or $500 in capital gains plus the premium that you took in. So I also want to be able to protect against these downturns. So when we have these trades, let's say we're selling covered calls for a few months, let's say the stock is moving up slightly, but not at our strike price, then we want to find ways to lock in those profits in case it does have a downturn afterwards. And it's always good to lock in whatever you have, right? So option selling, first case, you want to figure out ways to make your income before you're going to protect it. So I look for trades with a very high chance of success. And if you do the 90% winning in 90 seconds, if you're in that email, you'll see a lot of different strategies that are free and ways to do that. Option selling is a way to do this. So for example, let's say a stock's at $200 a share. You could sell a put at $190 a share, so lower than the current price, and then take in income. If the stock stays above the 90, then you keep that income. So you want to think about it like a casino owner. Let's say you're owning the casino and like a roulette wheel, and then you see people that are betting on individual numbers. Now, there's a lot of numbers in a roulette wheel, so there's a very good chance that the casino owner will win on that individual bet. What you also want to do is make sure that you're protecting yourself in case that number happens to hit, and then you have a lot of protection in place as well. So if the stock's at 200, there's a better than 50% chance that it's not going to go down to 190. It could stay at 200. It could go up to infinity. It could go down up to 10 points, and you would still win on this trade. So we're looking for those high probable trades. So ways to produce income, these are just some ways. There's many others that you can look at. You could sell an out of the money put. That's what I just said. The stock's at 200, sell the 190 put. You could sell covered calls. That's when you own the shares and then sell a call against it. And that's actually a very conservative trade. So if you owned a stock at $200 a share and you didn't do any options with it, you need the stock price to move up in order to make capital gains and profit. But let's say you sold a 205 covered call against it. It's actually a more conservative way than just holding the stock because you're getting in that income as you sell those covered calls. It does lock in your gains. Like if you went past the 205 at that point, then you would be at your max profit, which is good. But if it went to say 300 or so, then you wouldn't get the full amount that you would have without selling the covered call. So that's one way that options could actually be more conservative and safer than owning stock. And a lot of people have these preconceived notions that options have to be really risky and there's no way to make them safer. You're going to learn a lot of different ways to make them safer besides this later today as well. What I primarily do are both selling the out of money put and selling covered calls. So you're going to buy 100 shares, you're going to sell the put and sell a covered call. In this case, you're getting in premium or income on both of these. Here's an example I'm doing with Iron. This is a Bitcoin miner and energy company. So I bought 100 shares at 11.28 a few months ago. Current price yesterday was 10.66. I sold a put at the 10 strike, and I took in $54 in premium from that. So we do 54 divided by 11.28. That's a good return in 17 days. It was a little bit longer when I took the trade, about 25 days. And then I also sold a covered call at the 15 strike, took in $60 for that. So this is over 100 with $114 in income off 1128. So that's about 10% on your money. It's actually a little bit less because you need to have some of your cash for this naked put that I sold, but still a good return overall. And then if Iron went up to the 15 strike, then I would be selling the shares at 15, which I'm perfectly happy with because I bought at 11.28. I'm agreeing to sell it at 15. So I got a good amount of income here, and I took in premium off the caskered put and the covered call. I think there were some questions. I think Ace option trading.
Yep, I've been answering them a bit, but you should probably chime in here too. So I'll put them up on the screen. So how much does one need to make a full-time job? I told him that you're doing about 10% a month with this covered strangle strategy, so you could extrapolate from that what size you would.
Yeah, it depends on your account. It depends on your account size. It depends on how much you're actually trying to make to have your full-time job. I don't know, just ballpark number. Let's say you make $60,000 a year. You divide that by 12. You're looking at about $5,000 a month. You're going to need a fairly large account size in order to get that. Certain months will be good, like the 10% month I had in January. Other months might be lower. So it really depends on your account size. It's not going to be a very straightforward answer to give on that.
Yeah. I mean, for sure. It's interesting. You just said he's a credit spread trader who wants to get better. So covered strangles are a good thing to do. I was telling him that the covered strangle strategy, at least with the futures that we were doing, hadn't had a losing trade, right? With the for in years, so they're very high probability, which is really good.
Yeah, and the consistent passive profits trades that are part of the covered strangle program that I have. Yeah, they haven't had a losing trade in about almost 3 years now because we started in May of 2022.
Yeah, it's been incredible. I've never seen anything like it, especially to have such a high return compared to, maybe 1% or something on some of these other high probability trades. To get anywhere between 5 and 10% is pretty nice. And so I was really impressed. And it's partly why we're talking about it tonight, right? Is because it is one of your favorite strategies and one that you're most proud of because it works so well. Anyway, here's another question. WWZD Gaming says, takes a lot of setup and capital to get all that together to work, though, right? Not really.
Not necessarily. You could easily do these strategies with a $2,000 account. You just have to open a margin account on like Tasty Trade or Thinkorswim. And in order to scale up to get a full-time job, you'll need a pretty decent income to do this. Like, we're not going for 40, 50% a month or anything like that. It is possible to get good returns, but it's not always going to happen that way. And it doesn't really take a lot of setup. In most brokerages, I opened a Robinhood account in November, and I opened it with a $2,000 account, and I was able to do the exact same strategies I was showing on that Iron and some other ones I'll show later. So it doesn't take much to set up. It took maybe 3-4 minutes to open the Robinhood account and get approved to do this.
Yeah, and then the trades are pretty simple as well. It's just couple of clicks of your mouse. It's nothing too scary.
Right.
Christopher's saying, do you know a compounding strategy that works well with this?
Essentially what I'm talking about, because if you're taking in that income, you're getting more in your net liquidating value, and so your account size is bigger, and then you could do with the profits that you're making on more trades. So you just keep amplifying it out. You could also add more contracts on the positions that you currently have as well. So you could do compounding. If you're buying and holding, and let's say you're getting a steady dividend on a company at maybe 3 or 4% a year, those will compound if you're reinvesting the dividends. However, doing it my way with the covered strangles, you could greatly amplify those returns compared to just a dividend. And you could do this off dividend stocks as well. I have a few of those where you get your dividend income, you get some premium off your cash your put covered calls, and you might get capital gains. So there's a lot of different avenues to make income off these. I know, like Robert Kiyosaki talks about having many sources of income and not just one way to get it. Like doing options and all these strategies I do have multiple sources of income.
Yeah. All right, back to Ace options trading. Yes. Does it depend on the stock and premium for doing this strategy?
I have some that are pretty conservative where I'm not going for 10% a month or anything like that. I'm doing it with silver currently where I'm getting around 2 to 3% a month on those. But silver is a very unvolatile stock. Like the price of silver doesn't tend to shoot up or down, and it's a pretty safe strategy. If you're doing them with other stocks like the Iron I showed, it's a little bit more volatile, which means that there's more uncertainty where the stock price will go, but that allows us to get more premium as well. So I have a big mix of many different ones for members. Some members are at retirement. They want to be more conservative, and they're fine with just a few percent a month. And then other members want to go for a little bit more aggressive, higher percents. There is a little bit more risk there. So I show a little bit of both, and I'm perfectly fine with doing both the conservative and the slightly riskier ones. And I show all the trades that I do, and some members will do more of the more aggressive ones and less of the conservative, or they flip it. I do one-on-one Zoom calls with everybody as well, depending on where your situation is and what your goals are, and we could come up with a plan of do you want to be more aggressive or more conservative?
Cool. Looks like all the questions are done at the moment, so we can probably get going and see what else we've got.
Keep asking as I'm going through this. This was the trade log for Iron. I've been starting it on November 15th, and I'm currently all the way to 221. As you can see here, CC is the covered calls. That's where I'm selling a call above the price. I initially bought at 11.28, and I sold a 12 covered call. That expired worthless. I took in $45 off it, which is about 3.5% in a month off just one trade. I also sold a put at the 10 strike, took in $27. That expired worthless. And doing these on margin, you need a lot less of your buying power than the 10 strike. So if you did it fully cash secured, it'll be 10 times 100 or $1,000. But doing this one only took about $400 in buying power, so or margin, so it's a lot less, and that amplifies the returns. So as you can see, I was doing this quite a bit, selling the covered call, selling the cash secured put, and then what I do is I find my cost basis. That's essentially the price that I bought the shares, and then I'm going to keep subtracting all the income that I'm then taking in. And I brought the cost basis down to 7.39. That's the current value. Right now, IREN is at $10 and change. So it's up almost $300 just off one contract on these. Also, what I'm doing is protecting my gains. What I did here is I bought a married put. So instead of selling a put, I bought a put here for protection. It cost me $95 in protection, but bought the $8 put strike. Notice that the $8 is greater than my cost basis. If IREN happens to plummet and go below that $8 strike price, this put premium will be worth more. And then I would actually possibly make even more money off this bought put that I had.
Cool. Very cool.
So that's one way to protect against losses. You could have additional trades besides what I talked about. Buying a put is a very simple way to go. What's interesting about buying a put is it's another type of asset, because when you're buying a put, you control if you want to exercise it or not. If you're selling options, you don't have the right or obligation to get called away or get more shares. But when you buy a put, you control that. So at any time, if you wanted to, you could control another 100 shares of stock. Also, buying a put debit spread is another way to go. It would make a lot less initial outlay of your profits to do that. And it does give a possible return as well if it happens to drop. Another good way is I see a lot of traders are doing stop losses on trades. So say you buy a call and then it's going down in value. The stock price is going down. At that point, you might have a stop order, let's say 40, 50% lower than you bought it at. The problem with that is sometimes the bid-ask spread could be very wide. And then if you put a stop order in, the market makers will just try to fill you at the best available price. However, if there's a gap down, you might have to stop out at a lower price than you put in. By buying a put, though, there is no stop order in place. The only difference would be the bid-ask spread, which tends to be pretty close to one another, especially the stocks that I do. So yeah, this was the married put from before. I bought the 8 put, 101 days of protection. So what I could do is continue to sell covered calls, sell cash secured puts or naked puts against the position, lower my cost basis, take in income every month that I do it. And then if it happens to drop, this gives me that sleep at night protection that I could have in case it does drop pretty dramatically. And the cost basis numbers that I showed included the cost of the put that I bought. So if I didn't do this, my cost basis is under 7. If I keep doing this over about a year or so, my cost basis could be 0 on this. And then at that point, I'm just taking in income month after month. As long as I'm not losing my shares for a lower price than I bought them at, it's just literally just a money maker and just printing money every month at that point.
Very cool. Very cool.
Any other questions for now?
Not yet. Ace did say it was very interesting, so that's good.
Okay.
All
right. So this position I did, it's not all red roses here. I added a married put on SYM before earnings. Earnings came out today and it actually dropped a bit. But what was good was I bought this put. So I bought the stock at 30.04. I bought a 30 put for 101 days. So I have over 3 months of protection here. And then I also sold a covered call. I took in $170 off this sold call. As of now, SYM is around 26. It went down based on earnings. So I'm going to be losing a little bit on the shares, but I'm going to be gaining value on this married put. And it's not going to be a 1-to-1 ratio. It's going to be a slight loss on these two positions. However, the covered call will be worth less than what I sold it at because it's a little further away. So it's a very safe way to go. If you're not really sure what's going to happen on an earnings play, I would consider buying a put and then selling a covered call out of the money. Any other questions? Ace is saying it's like passive income for free. In a way, obviously, if the stock drops quite a bit at that point, then it wouldn't necessarily be free because you might have to sell your shares at a lower price than you bought them at. But if you're picking pretty stable stocks, and I do a lot of fundamental analysis, I look at earnings, revenue, income, seeing the trends over time, seeing if it's buying back shares or reinvesting dividends and dividend growth rate. I look at all those things in order to see if it's going to be a relatively stable stock. And if it is, then it is kind of free as long as you're able to eventually sell the shares at the same price you bought them at.
Luigi saying, do you do one-on-one or class courses?
Yes, I do both actually. So if you're a member of datatraders.com, I'll do monthly group Zoom sessions, and I go over all these different strategies. We have many different strategies that we implement, and I leave kind of an open house, so to speak, if you've been in college where the professor is just available for questions. So I tend to do one of those every month, and then I do a strategy type one once a month, and just go over like similar things I'm talking about now. And then we have a pretty close-knit community of members that are learning with us. So yeah, a little bit of both.
Cool.
All right, no more questions right now. So this is another trade that does help give some protection on your account. This is a Safeguard 112 trade. In this case, I did it with futures. What I did was I sold 2 naked puts at the 5,600 strike price. And then here I bought a put debit spread, 53.20, 52.20. So it's a 100 whiff spread. And this one will possibly profit up to 100 with times MES is a 5 multiplier. So that could profit up to $500 on this put debit spread. And I'm also taking in income off the naked puts. So if you look at the numbers here, I sold 2 naked puts at 9.25. So you multiply that, it's 18.5. I paid 8.75 for the put debit spread. So that's around 10 or so net premium on this trade. And then you could either let this expire worthless, or you could close it out a little early like I did. And then what I do is I leave this on as protection, and it could possibly make a bigger return if the market drops. So this gives me 150 days of protection, where if the market happens to drop there, I can make an extra $500 on this trade beyond what I already made when I started the trade. I think the next slide talks about it. Yeah. So what I did here is I closed out the naked puts at 4, but I'm leaving this put debit spread on. It's like having a big wall of protection by having a lot of these stacking up against one another and then getting rid of all the risk, because this is the risky part of the trade. This trade has 0 risk in it, because if it happens to stay above 53.50, it won't profit. But if it went between 5,350, and 52.50, it would make some profit, and the max profit is below the 52.50. So the goal is to just stack those on more and more, stack those put debit spreads, and then you have a lot of protection if you have a downturn. I said you could expire, and I'll probably do that once I have a few more of these protective walls stacked up together. Right now, I have, I think, 3 of them. The goal is to have at least 5 or 6, and then if I'm selling those naked puts to take in that premium, I'll have plenty of protection with me. Okay? In this particular trade, I made 52.50 on the naked puts, and then I'm leaving the put debit spread on for protection. All right, so here's a few different ways how I help members out in any of the plans I have. So members could message me one-on-one, or they could message in the group chat channels that we have. This was one recently. He just joined the credit spread service. So he was trying to figure out how to enter and manage a trade that we did. So what it is, I actually sent a quick video showing exactly what to click on in your brokerage. This is tastytrade. And then he just saw it, said, I'm a good teacher, and I do what I do. That's what I do. No questions right now? Okay. So why should you choose our program? If you join in the Consistent Passive Profits, and Russell will leave you a discount link shortly, you get access of lifetime access. So a lot of groups that I see will do monthly or quarterly or maybe yearly plans, and then they kind of stray a bit. They might not want to continue going with it. So we're giving lifetime access. And I have members that have joined for 3-4 years now. I don't hear from them for 6 months or so. And then they see a new strategy I'm doing, and they're suddenly like, oh, I want to learn about this. And that's why I'm here and available. We have a very close-knit community, a lot of members that are very helpful and willing to learn. So you get lifetime access to the covered strangles. You get the married puts that I was talking about, where you get that protection. We do those monthly group Zoom meetings where we go over different strategies, have the Q&A sessions. And then you get a one-on-one Zoom with me. We'll go over the basics of the strategy, any questions you have on it, and also possible allocations on maybe I want to do a certain amount on the risky side, a certain amount on the safer side. And based on what your personal goals are, we'll go over a plan that might be good for you. And that's all I have for this presentation.
Pretty good, pretty good. So yeah, so the covered strangle strategy, I'll post a link in the chat here if you want to go and check out what the lifetime deal is on that. If you're watching the replay, it'll be in the description below for the covered strangle stuff. Ace Options is actually, do you do 0DTE SPX trades? Yes, but not in this particular plan. So
yeah, we do 0DTE every day. Today I did one where, well, let me look it up. I think we took in about $40 in premium off 1,000. So that was a 4% return for just the day, and it expired worthless. So yeah, we do 0DTE every day except when Jerome Powell talks, because those days are a little bit more volatile. But otherwise, yeah, we had a really good results last year. I think it was over 40% for the year in 2024.
Very cool.
If you're interested in that one, you can go to thetatraders.com and you can join the quarterly plan. Quarterly plan has access to the 0DTE. Also, if you join the Inner Circle plan, you would have lifetime access to it.
For sure. Very cool. Should we pull up the page maybe? Do you want to go into the actual landing page? And
sure. Do you have it open on your end?
Okay, yeah, let me just load it up.
As you guys have other questions, that's why I'm here. So feel free to ask.
Just pulling it up on my end. Let's see.
Ace said, definitely interested. I want to join. Trying to save $2,000 to be able to start. That's perfectly fine. Yeah, you need $2,000 or so to open up a margin account on a brokerage. So once you have that, you could easily start implementing any of these strategies. We do plenty of different ones like 0DTE. We do longer dated spreads. We do the covered strangles that I was talking about. There's pretty much a plan for everybody based on what their goals are.
Yeah, for sure. So I just put up on the screen the landing page right here. So it's still in the New Year sales mode, right? So we did
Yeah.
50% off for New Year, but we just haven't got around to changing that. So we figured for this webinar, we just kind of keep it the same for anybody that wants to kind of join in with this. And so, yeah, it's had 100% win rate in 2024. I think the year before that as well.
Yeah.
So it's been phenomenal. Account growth in 2024 was 84%. At least that's what I have written down here. Is that right, Lance?
Last year, yeah, it was around 84% in the covered strangles. Yes.
Covered strangles, yeah. Yeah, so it's pretty amazing, really. Like, people complain that selling options you don't make enough money, but like that is phenomenal for anybody, right? Like that's a good win for the year, 84% on your account. So this is just for the covered.
That didn't even include capital gains. We're just doing it on futures where we weren't assigned on. We weren't assigned on any of the positions. If you do it with capital gains, and I could show you how to implement that, you could be over 100% last year on it.
Yeah, which is pretty nice. Pretty good. So it's the lifetime access to all this. So the real-time trade alerts in Discord and support from Lance. You've seen how helpful he already is. He's like that with all his members for no real additional charge, right? Like you just help people. That's what you do. So the cost is more than fair for the help that you get with these things. And they really are set and forget. Like these are not crackhead day trades. You know, they're much more chilled out than that. You don't need to trade 50 to 100 scalps a day and still lose money. You can do this strategy and make 84% in a year, like last year.
Yeah. Like me personally, you know, I'm a teacher. I'm teaching throughout the day. I'm helping out members throughout the day at lunch and whatnot. So I'm not going to have a lot of time to do all these scalping, you know, looking at the 1 5-minute chart and getting in and out. So I do trades that are typically, you know, you enter a trade, you wait about a month and then get the returns. But that some people have preconceived notions that you won't make a lot of money that way, but it's still very possible. I made 84% last year off covered strangles.
Yeah. And so here are the bonuses. Like there's a bunch of stuff we already kind of talked about, but Lance is really good at making little courses. So he has like dozens of these little e-guides to do with all his strategies. And there's one for this strategy. So you get that included in the price. And like we keep saying, you can get one-on-one Zoom calls with Lance to talk about the strategies. And we do limit that. But, you know, for each webinar, we usually are fine with a handful of people getting the one-on-one Zoom calls with Lance because obviously Lance can't just talk to everybody all the time. He's got other stuff to do. But he does a better job than most alert services do in terms of one-on-one help, like better than any of them, really. If other services do offer one-on-one Zoom calls, they usually charge an arm and a leg for it, whereas it's free and with a subscription for this service. So that's a really high value that Lance adds to this, I think.
Yeah, I wanted to make my membership more personalized based on people's goals, because a lot of other memberships will say this is the trade you're doing and that's it, and don't even really think about anything else. But you know, different people have different goals in mind, so that's why I want to make it more personalized. And I am a teacher, so I'm able to convey these concepts for, you know, beginners, intermediates, even advanced traders.
Yeah, for sure. And there is another, so you get the covered strangle alerts, but there's also weekly naked put alerts, which have also never lost as well for the last 2 or 3 years that I've been following this at least. So these ones are amazing as well, these naked put alerts. 2 to 5% extra per month with very little effort. Takes like a minute to place the trades. And they're very passive and lucrative as well. And the probability is just so high on these. That's really good. So yeah. And then the position size guide stuff, it's always important. And we did do this money back guarantee. This is an old landing page, but the offer still stands. So if you follow the covered strangle alerts and the win rate is less than 80% over the course of next year, we refund your money. So this is put in there because we know for sure that it will be over 80% because it just will be. That's the mathematical probability with these style of trades, is it will always be over that. And you've seen it's not like one of these cases where, you know, you end up taking a huge loss because of the protection that gets put in there by Lance with these married puts and things like that, then you end up making sure that even if it is a losing trade, it's not a huge loss that destroys your account, and you end up with, a high win rate, but not a high profit factor, if that makes sense.
Right.
So it's really good like that. So yeah, really are the best out there from what we found in terms of being passive, in terms of returns, and overall just help from Lance is really good. So yeah, hopefully that's helpful. Hopefully there's any more questions about the actual thing here. So let's see what people are saying.
We've got a few questions. Bill C wants to know how to go over a covered strangle trade. If I could present my screen, I'll show you how to do that. I think you might have to share first.
Oh yeah, I'll remove it now. There we go.
All right, give me a second.
Okay, I'm gonna. Looks like you're on the wrong. There we go. I see it. Okay.
Boom. So you see my brokerage right now?
Yep.
Okay, so here's NVIDIA. To do a covered strangle, you would first buy 100 shares of stock. So you just go to shares, buy 100 of them. And then once you do that, you're going to be selling a covered call. So we're at 125. I haven't done a lot of technical analysis right now on it, but I would look to sell a little bit out of the money on the covered call side. We could go about a month out. So I say 30 days out. So at 125, I might sell around the 133, 135 strike or so. So if I sold the 133 strike, you would take in between 570 and 625, so maybe about 585 or so dollars. You would sell this. So on the left side of your calls, you click the bid. You'd be selling the call here, taking in $570 or so. And then you also sell a put against it. I would probably look around 115, 120, or 115, 110, somewhere in that regard. Again, I didn't do the technical analysis yet. Let's say I sold the 110, you would take in another $300. At this point, you're agreeing to buy more shares at 110 if it drops to 110 or lower. But that's a good thing if you're long-term wanting to hold the stock, because the current price is 125. If you sell the 110, then you could average those two shares, and then your average cost will be lower than what the current price is. And then at that point, you would have 200 shares of stock instead of 100. And what you could do is sell 2 covered calls against it, and then take in more premium on the other direction as well.
Yeah. Okay. Cool. Ace Options is asking, can you make a good doctor's salary doing this? Sure, you could. You'd need a $400,000 or $500,000 account, assuming a doctor gets paid $350,000. A specialist probably gets paid about that. Then you'd have to figure out what 85% of that is. So you'd need a few $100,000 to replicate, a doctor salary. Doctor salaries vary a lot, though. Some are 150,000, some are 500,000, so it's quite a range there. But
one of my personal goals is to replace my teacher salary by the time I retire, and that's not that hard to do necessarily, especially if you're just thinking in a long-term mindset. Just continuously taking in that premium years after years, adding to the account as well. With your own funds, and then eventually you can replace your salary.
Cool. WWZD Gaming saying, so the price listed there is lifetime price, the $597, and that gets you access to the strangle trade strategy in its entirety. And answered, yep, it's for life, and you get everything that we're just talking about.
Yep, so everything we're talking about, lifetime access for $597. It's really hard to beat, because even if you're not quite ready to do this with like all of your funds, and I wouldn't recommend just going all in right away anyway. Like, we're here for a lifelong learning experience, and then once you're able to know how to put in the trades, able to manage them, and then we could talk one-on-one on Zoom to go over how much to use for different types of strategies you have.
Yeah, for sure. And to point out, this is 50% off. So this strategy has sold over the last few years for, I think it's $11.97 on thetatraders.com. It's under consistent passive profits on thetatraders.com. And so
Right.
this is the sale that we're trying to offer you guys on this webinar. That's been our New Year sale that we just have never closed down. We've just left open for the whole of January. And before you know it, you're into February and the sale's still up. So we figured we'd kind of have another run at this and see if you guys are interested in joining Lance for a total bargain. So yeah.
Got a few more questions coming in here. Covered strangles are definitely possible in Robinhood. So pretty much any brokerage will let you, as long as they have options available. I'm doing this currently on Robinhood as well. Tasty Trade, Thinkorswim, I think even Webull. So there's plenty of brokerages that'll let you do this. It's a relatively conservative strategy, so pretty much every brokerage will let you use it.
So Luigi's asking, where can he message you, Lance? You could put your email address in, or you could just have him do it through. Emailing Lance directly is probably the best bet. So
it's just my name, Lance at Gmail. It's my personal email.
I didn't see it come up. Did you already type it in?
Yeah, I just posted it.
I'm not seeing it in the comments.
Did
you? Just looking.
Or if you want to type it in. But
yeah, maybe it blocked you because you're not the all-powerful wizard here. So do you want to send me the email that you put in the private chat, and then I'll post it into the
sure.
Because I think I know what your email is. I just want to make sure I get it right.
We email all the time. I got it. I sent it on your Discord.
Usually some sarcastic.
Yeah. or Balatro strategies.
Yeah, right. I haven't seen anything coming in from private chat from you either here. Not quite sure what's going on.
I sent it on your Discord.
Oh, my Discord. All right, yeah. I thought you were going to do it in the private chat on the StreamYard platform here.
I'll do that too, then. Everywhere you could easily access me.
All right, I got it on the private chat. So I'll post Lance's email address here. So all you robots that are out there ready to spam him with emails.
Yeah, the YouTube is very picky about putting emails in a live chat, I think.
Lance's contact details. Let's see if they let me do it. So it looks like it posted for me. LanceKaminsky@gmail.com. All right, so let's continue with some questions here. So WWZD Gaming again, do you have a preferred brokerage platform?
So I personally have quite a few of them because all my members have different ones, and I want to show them how to enter manage trades based on the brokerage. A lot of them are very similar. There's not really one in particular I'd prefer. Thinkorswim is very good from Schwab. Tasty Trade is also good. Robinhood could still work fine as well. Based on customer service, though, Thinkorswim is top notch. So even though you have to pay a little bit of commissions when you're doing options, I think it's still worth it. But I'm still doing them on Robinhood as well. So I would say Thinkorswim's probably number one in the end.
Yeah. Aaron's asking, Iron has 7 days to earnings, so do you take that into consideration?
Yeah, that's why I bought the married put. So I bought that put at 8 for protection in case it drops. And that's one reason why I actually did it into the earnings. And I did enough days where it'll be good protection for 2 earnings, this one and then the next one after, around 90 days from now.
Cool. All right, let's see. I think we've got through all the questions here. I'm just kind of looking down. Ace is saying, thank you for doing this live. Yeah, we like doing stuff live. I think it's good to be able to ask questions and talk about things. And thank you for your input in tonight's discussion as well, because it's always good when somebody's engaged and is interested in going back and forth, which is why we got into the habit of doing these live streams a few years ago, right, Lance? Like, it's just better than just doing like a recorded webinar. If you're watching this recording, though, you can still reach out to Lance, I'll put his email address in the description as well, so you
Yeah.
can still reach out to him then.
It gets pretty boring when I'm teaching like chemistry and I don't get questions from my students and I'm just like telling them stuff. So I'd like to see engagement, and I do in trading as well. So that's why I like to see questions as they come up.
Here we go. There's another good question from WWZD. You must always own the shares first to execute these trades.
No, you don't. What you could do is you could sell a put to start the trade out, and you don't even own the shares yet. So let's say the stock like Nvidia was around 115, or it was a little higher. You could sell like the 100 put, and then get premium. If it doesn't go to 100, then you would just collect that premium. You could do it over and over again without actually owning the shares. If you do own the shares, then you could sell covered calls against it as well. So sometimes I'll enter a trade where I don't own the shares. I have that with SOUN right now, SoundHound, and it's paying good premiums. So yeah, you don't have to own the shares.
Okay. Well, we'll give you another few minutes to see if anybody else has any questions. Any questions about the strategies, any questions about thetatraders.com. Hopefully you've had a chance, if you're not familiar with it, to check it out. He has his complete range of strategies for everything he does on thetatraders.com. And you can kind of look through that. And we do payment plans and things as well. So we're probably one of the most flexible systems out there for options trading, right? We bend over backwards to help people to, pay for these things in terms of, payment plans or whatever like that. So
right.
Sometimes their own detriment, but
yeah, I like seeing these questions that are from relatively newer traders, because there is a lot of preconceived notions that people have about options, but they're not always true. Like the conservative way of selling covered calls, it's safer than owning the stock, and you don't need to own shares. There's a lot of things that people might think about options, but they're not necessarily true.
Ace Options is asking, does it depend on the expiration date?
If you could elaborate more of what depends on it. You could sell options 0 DTE, you could sell weekly, monthly, you could sell really far out in time. In general, the further out in time you go, the more premiums there are, but you would have to wait longer for the options to decay. So it's almost like a seesaw. It's like a fine balance there. In general, if you sell more shorter dated options, you could possibly make more premium than if you sold, let's say you sold 4 weekly options compared to 1 month option. You'd probably take in more premium on the 4 weeklies. However, there's a bigger chance of getting a sign because you're doing 4 of them instead of 1.
Yeah, so you did elaborate. He says, to do the covered call, does it depend on the expiration to sell without owning the stock?
No, it's the same idea. If you're doing a covered call, you already own the stock, though. So I think you might mean a cash secured or a naked put. If you're selling a naked put, you could do, again, any expiration you want. If you're doing a covered call, you could do any expiration. We do some strategies where we try to collect the dividend. I do that with BITO. It's a Bitcoin ETF. They pay really good dividends. It's about $100 a month per 100 shares. And I'm selling premium against that as well. So sometimes we'll purposely sell options to collect the dividend, and we're perfectly okay if we lose our shares because someone else wants the dividend, because it ends up being a very good return in a short amount of time. It's called the dividend capture strategy.
Yeah, so many different variations and strategies, and thetatraders.com is it's loaded with strategies. So this is just one out of many that Lance does, more than you can imagine somebody would be able to handle. But it's a plethora of a pretty amazing strategy similar to this one. So if you find interest in this stuff, you might also be interested in some of the other strategies on the thing. So Ace is saying, thanks for clarifying, and for the payment plan, instead of paying at once, do you guys do like multiple weekly payments till the balance is paid in full? we're pretty flexible. We've been burned a few times by people just not honoring the payment plan, so we prefer it not to be like $1 a week for the next 10 years. But usually, if we can come up with a reasonable thing that everybody agrees on, we'll do it, because you can see how sometimes the odd bad egg will just be like, "I'll give you $1 a week for the next, five years," and then $2 in, they've learned the strategy. $3 or $4 in, they've Zoom called with Lance 5 times for an hour each time, and then they set their card to cancel, and they've already extracted every bit of life out of Lance that you can possibly imagine. So anything that's reasonable, so for this $5.97, I don't know, what would you say, Lance, would be a reasonable payment plan?
We usually do monthly instead of weekly because people get paid once or twice a month. You'll probably do it in about 3 months or so.
Yeah. So he's saying, sorry, what would happen? Would $250 a week be doable till it's paid off? That's only 2 weeks though, so that's totally fair. two or 3 weeks.
So yeah, 2.5 weeks then. So
that's more than fair. No, we've had people do ridiculous things that we should never have let them do, or they'll pay $67 for the year, over 12 months.
If you do say $200 a month for 3 months, or it's like $199 for 3 months, that should be fine.
Yeah, and so to do that, you just need to contact Lance or myself. I don't know. I haven't put my email in here, but I can help you get set up with a payment plan. Lance is probably the go-to that you have his email now, and for sure, we just put together a custom plan and send it out, and a lot of people did it that way. Actually, we've had quite a lot of members. Quite a lot of people went the whole way and bought Inner Circle Lifetime, which this is just like one of the strategies in the Inner Circle Lifetime, and so a lot of people are buying the top tier plan, which is the Inner Circle Lifetime, and it includes this, but how many other strategies? 10 other strategies that you do?
It's at least 10. I'm thinking of new ones almost every month anyway.
Right.
So it's hard to say the exact number. If you look at my website at datatraders.com, you'll see all the different strategies that I do. Another thing to mention is if you wanted to start on one plan, like the quarterly plan or this deal in the covered strangles that we're doing, and you're interested in other strategies, we use what you pay as a credit, which I don't think any other service would do that.
Very few.
If very few would. So, if you pay the $5.97 on the covered strangles, and then later on, I want the 0 DTE as well, we use that as a credit.
Yeah, it's a very fair way of doing it. It's doesn't make the most business sense for us, but it's a fair way for the consumer, the customer to do it. So
yeah.
All right, we're still getting some questions here, which is fine because we finished a bit early, so we have plenty of time to answer questions. Do you have a suggestion for a starting amount in an account that's
depends on the strategy that you're doing. If you're doing, say, credit spreads like 0 DTE, you can start with $2,000. Just open a margin account. Even for the covered strangles, you can start with $2,000, and that's a good starting amount. You won't be able to do a ton of trades with it, but it will help you learn and understand how it's going, and then you could add more to it afterwards.
Pretty good. Yeah. Any more questions? We still have 5 or 10 minutes if needed to wrap this up in the next little bit. But if there's any more questions, we're happy to answer them and go from there. Give it a few minutes. But yeah, overall, this covered strangle strategy, it really is amazing. It's something I try and show people when they say you can't really make big amounts of money trading, selling options. And we always hold this up and are like, actually, did you make 84% last year doing very little? Or did you crack a day trade for the whole year and end up actually with less returns or even a negative return?
Yeah, so, you'll see you go to your CPA for your taxes and it's 100 pages of trades that you did and you only made $300 or something. The CPA is like, what are you doing? You're wasting my time.
Yeah, exactly. So that's why we're so excited about this strategy. I've traded it. I love it. It's really good. And I think is something that everybody can benefit from for sure. Something
Yep.
that you really can't live without it.
We had a few beginners, brand new to options, didn't know anything about it about a month or two ago. And they're already like, yeah, this is so simple and it works. So that's the type of members that we like to help.
Okay, a couple more questions coming in. Ace Options again. How do you guys manage a trade, say on a 0 DTE, and the trend is green for the day, but suddenly tanks? Not expecting your strikes to hit. How do you go about managing it? That's your 3x stop loss, right?
Yeah, I typically do a 3x stop loss. It almost happened today, and I was pretty active on the Discord explaining, like, watch for this. And we set an alert price where it actually didn't get to that price, but if it touched the alert price, we would have just got out of the trade. Sometimes if you want to keep it a lot simpler, just get a 3x stop. So if you take in, say, $50, you'll stop out at $150, which means that you would have lost $100 total. But then I treat these all as probability-based events. So we have a very high win rate. And over time, sure, there's going to be some losers. If anyone says that you're not going to have any losers ever, they're lying to you. So I'd run away. We will have some losers. And as long as you're able to manage your account size, make sure you're not oversizing on your positions, and then just treating them as probability events, it does work in the long term.
Yeah, it really helps to have Lance like on your butt about this as well, because when you're trading a strategy that doesn't lose in 3 years, the temptation is very, very high to start getting bigger and bigger positions in it, because you just feel invincible, right? Like you just feel like you can't lose. But one day there will be a losing one, and you've got to keep that in mind. Otherwise, like it's really going to burn you. So that's where Lance comes in and helping like keep you in check. He's like almost like I don't know what you'd call it, like a mentor, I guess. But somebody was just like, nope, don't keep expanding it. Don't just don't remortgage your house and start doing covered strangles with it, because make sure you understand that these do lose occasionally. These haven't in the last few years.
Another thing that I didn't mention is when you join any of the plans that I offer, you'll get complete access to every strategy guide of every single thing I do. And there's over 40 documents that I all wrote based on how I manage each individual trade. So even if you join just the covered strangle plan, you'll see more guides on 0 DTE, credit spreads, pretty much everything that I do there. So.
All right, you got another question from WC Wong. It says, hi, Lance, I'd like to know how to get the alerts once we join the plan.
Yeah, so we do them via Discord. You can leave Discord on your phone or your computer, and then you will see whenever I enter a trade, I tag everyone at it so everyone knows exactly when I entered a trade. I'll also be communicating throughout the day on what I'm looking for in the different positions. Every morning, I'll go over different credit spreads that I'm interested in the quarterly or inner circle plan. For the covered strangles, I go over different articles and different news that's happening with the individual stocks I do. Off Discord, if you have it on your phone, you can set up phone notifications. So it's just like getting a text message, and you'll see exactly when I enter a trade.
Cool. I just answered Bill C. is asking how much for the 0 DTE SPX plan. I told you that people would be interested in this. Remember, I'm like, this is one of the coolest systems.
Yeah.
I thought it did really well last year. What was it up last year? Like
it was over 40%. I think it was like 42% or something.
So 42% doing just one daily trade near the open SPX 0 DTE. And it's in the quarterly plan on thetatraders.com. So I just posted the thetatraders.com website again for people that don't know what it is or where to find it. And it's under the quarterly plan. It's $197 per quarter. So really reasonable, very reasonably priced for what you get. So, yeah. Okay, yeah, so Ace is looking like he says, could I pay on Friday when I get paid for the quarterly? Sure, the quarterly's on there. You've got Lance's details. You could just sign up through the website for the quarterly plan if you want to start with that. And then if you want to remember, the quarterly plan isn't the strangles. That's the 0 DTE SPX stuff, as well as some credit spreads in there as well, I think, right, Lance?
Right. And if you want to get both, you could send me a message and we could give you a discount on both of them together.
Since we have time, let's pull up thetatraders.com as a whole. So I'll pull up here, and we can just make sure that this is all really clear for people, because it seems like we have some people that are quite new to Theta Traders, and let's see what happens. We pull this. Connection is timed out. It's not good.
Maybe get rid of the S.
There we go. All right, you can see it okay?
Yep.
Yeah, so this is the main website for Theta Traders for you guys that don't know. It goes through different membership plans here. Things have changed a little bit. We used to have a free trial for the quarterly. We got rid of that because we had so many people inundating Lance with questions and then just not staying signed up. They would just come in and pick his brain for 7 days, completely swamp him, and then they just wouldn't stay signed up. But you can see as you scroll down, there's information in that video. But as you scroll down, you can see what's included. So this is the top tier plan. This is more expensive. So it should be, because there's a lot of value in here. It's $2,000. You can split it into payments if you want. It includes every single strategy that Lance does in detail. So you can see, like, there's the coverage strangles, the future strangles, the 0 DTE SPX, 3-month SPY alerts, the groups calls, the weekly future puts, the Iron Butterfly stuff, like all this stuff. There's also an indicator, by the way, that's called Theta Pro, which we're particularly proud of. We launched that last year. It went really well. He does trades off the indicator. You also get access to the indicator as well. It's the only indicator designed for sell-side trading that I've ever come across, at least from all my reviews on these types of indicators. So it's pretty cool. We do oil trades as well. So there's a lot of emphasis on futures here. So oil futures, ES, gold as well. So this is like the premium package that includes everything. So obviously that's going to be more expensive than the other ones. So we have safeguard trades. Lance mentioned these, the 112 trades, with some extra protection in there to help. These did pretty well as well. These have been pretty successful. Consistent passive profits. This is the covered strangle trades that we're talking about here. So you can see normally it's $11.97 for lifetime. And here you get the groups, Zoom calls, the strategy guides, the one-on-one coaching, the future strangles, the coverage strangles, the weekly future puts. And that's sort of what you get with this. So that is the link that I've been posting for the coverage strangles strategy. The quarterly people are asking about is right here. It's $197 every 3 months, which is still a bargain. I think it's probably too low. The 0 DTE SPX alerts that people are asking about, those are daily, remember, around market open. So you set your orders and then you kind of just let it go. Whatever's going to happen happens. It either goes and hits the target or it stops out for a 3x loss.
Right.
Put credit spread alerts, strategy guides. So yeah. And so we have a lot of happy members. I don't know if we have any testimonials apart from the ones that are on here, but we have a lot of happy members. It's a good community and people are really enjoying it.
Yeah, I get positive feedback weekly on a lot of new members that joined last month. They're all very happy with the service.
Yeah, so I think I just answered this, Shane. Do you do 0 DTE SPX trades every day? Yeah, and they're around the same time every day. So that's a really big bonus, right? The fact that you know when you're going to be placing a trade. Typically,
we do them every day except when Jerome Powell has a FOMC meeting. So that's 20-something days every month. There's plenty of trades that you could see it on, and yeah.
Yeah, so I guess one or two more questions. Let's see. So this one might be a bit more involved. How do you go about portfolio management? That's a whole discussion in itself, probably.
Yeah, so that could be a whole nother live stream. I did write a few strategy guides on how to allocate certain amounts on each strategy, and that's more of a one-on-one question based on what your goals are and what you're trying to do in your account. So I can't really give a quick answer on that, but there's plenty of information on the strategy guides to go over it.
All right, Shane saying, what's your win rate on the 0 DTE SPX trades? The win rate, what is off the top of your head for the whole of last year, for example? Is it?
I'm going to look it up. For 2024 on the 0 DTE, it was, just give me a minute, I'm looking it up. I think we had a 75% 75% win rate, but that ended up being a 48.5% return for the year.
Yeah, which is more important than the win rate, right? Like that's the amount that you return for the year is more important than the win rate, really.
Yeah, a lot of people think like just because you have a high win rate, that doesn't necessarily mean that you do very well. Just because if your losers are a lot bigger than your winners, you could end up with a net loss. And sometimes having a low win rate with a certain strategy could actually be a higher return depending on if your winners are bigger than your losers.
And the funny thing is, we're calling, what was it you said, a 79% win rate, or
Yeah, it was like 75% last year.
yeah. See, for the sell side strategies that Lance is talking about here, that seems like a very low win rate because we have track records of 99.9. I don't want to say 100%, but there are strategies like the covered strangle strategies that have never lost a trade. Not to say they won't ever lose one, but they haven't lost one yet. So to us, a high win rate is like 95%, 98%, you know? So 75% seems low, but it's really still pretty impressive.
Right. And the trades that have very high win rates, you also have to make sure that you're allocating properly. You don't want to oversize the account, and you want to make sure that you're managing it properly. Otherwise, those slight losses that do happen could be fairly dramatic. But I go over all that in my channel.
Well, this is the big difference I've seen with Lance and other sell-side services that I've reviewed over the years, is Lance really does focus on not so much on win rate, but actually being profitable. So stopping those big, the whole thing about pennies in front of the bulldozer where everybody thinks, oh, you win all of your trades, but then one trade wipes out all of the last ones. I think that's what separates Lance from most of these other services, is that he won't continually roll. So it's not like there's always these hidden losses, which you see a lot in some services where they'll just keep rolling and then it'll just kind of disappear and not be talked about. This is more about actually having a winning strategy, which is really cool. And Lance doesn't really roll. I mean, he will occasionally, but from what I've seen, but you really don't.
Yeah, I know a lot of other services, they'll just keep rolling and managing without actually closing the trade. And then it becomes like the martingale strategy where it could end up being a really big loss, especially if it doesn't recover in time. And it's also really hard to manage those. Like you got to be on your toes, very active on these. And I want to think of passive ways that you could make your money.
Yeah. And it makes it more transparent for people as well. So you can share spreadsheets and things that show the real results, not just like unrealized losses that don't get counted and things. So it's easy to have 10 unrealized losses and just say that you've won the last 80 out of 90 trades, but really there's 10 more that are being rolled that are really significantly underwater. So yeah, that's a philosophy at Theta Traders, is never roll. Not that it doesn't ever happen. Sometimes you'll do it, but it's strategic. It's not a way of just desperately trying to martingale into the thing. It's more strategic in that, like, oh, I'll get more premium if I roll this down, and then it'll be even safer this way or whatnot. Like with the 112s, that's one that used to do quite a bit of.
And it's also hard for members if they just join, if they're seeing that I'm rolling for many, many months, and they weren't in that position, then they're just waiting for other trades to come on.
Okay, another question. Can you elaborate covered strangle versus regular strangle?
So a covered strangle is when you own shares of stock and then you sell a covered call and a put. A regular strangle, you don't own the shares of stock. You just sell the call and the put. Regular strangles could be okay. You get good premium decay on them, and it's pretty capital efficient. However, if you're selling a naked call without owning the shares of stock and it runs up really high, you could have infinite losses theoretically. So it could really go against you, and it's hard to manage, especially if it goes past your sold call.
Really nice comment from Ace Options here. This has been one of the best lives I've ever been in. Thank you. We appreciate that a lot. So that's really nice of you to say it. It's very nice.
Yeah, I want to be able to teach people different strategies. I don't want to just be all hidden about what I'm doing and whatnot. So you could easily see this stuff. And if you're interested, there's plenty of resources on YouTube and other blogs and whatever that will teach this stuff. But I give that one-on-one attention that a lot of members might, prefer and need in order to just quickly amplify their they're learning on these things.
Okay, I'll post the deal for the Covered Strangles, the 50% off. We'll probably keep that 50% off for the next few days. Usually we do like a deadline of the weekend if it's Wednesday or something. Usually you do like a deadline for that deal. So it's worth jumping on it. Sometimes it gets closed. Sometimes we just let it go for a while, but you can never tell. Sometimes we close the deals, especially if we get a lot of people coming in, because Lance likes to be able to give that one-on-one concierge kind of style. So the Theta Traders is not a big Discord, but it's big enough that for one guy to be able to attend to everybody's needs, it's a miracle that it gets done so well. So kudos to you.
Decent. We got about 400 members, though. It's pretty decent.
Yeah. Imagine trying to take care of 400 members, though.
Yeah.
It's quite the feat. So we usually open these deals, and then if we get inundated with people, which sometimes happens, we'll close them off within a few days. But really not like a hard deadline on this one. It's more of a soft sell for this webinar. We're kind of chilling out. It's January, February now, I guess.
Yep.
And just kind of chilling out on it. So yeah, make sure you check out thetatraders.com. I've put the link in there. I'll put it in the description if you're watching this on the replay. I'll put the link to the Covered Strangles 50% off in the description as well. And yeah, we'll do one last question from Shane. Go for it, Shane. What is it?
Again, if you have any questions, if you go to thetatraders.com, there's a contact button there, and it'll go to my personal email. So you could easily ask me questions there as well.
Yeah, you get messages through that a fair bit, don't you?
Yeah, I get a few every day.
Yeah. But yeah, we'll do one more Shane question. Yeah, I think we covered that. Do you close your SPX 0 DTE trades at 3x stop loss? Yeah.
Yes.
If they fail.
In most cases, yes. So we typically look to take in around $30 to $50 or so dollars in premium off like a put credit spread or call credit spread. If you're doing an iron condor, which is both of those, we get a little more, usually $60 to $80, and that's off $1,000 in buying power. So we have some people that are doing many contracts or just one contract, and we typically close at a 3x stop. We just move on, treat it as a probability event, and then just do it the next day.
All right. Well, you guys know where to find us. You've got Lance's email address. You've got the thetatraders.com website, which has a contact form on it as well. I'll post my email just in case you want to email me, stuffworksreviewed at protonmail.com. And I can always get you in touch with Lance if you failed in other ways to do that, or answer some of your questions as well for that. Shane's got another question. Do you go 10 wide?
Yeah, I do a 10 width spread. So if you're doing 10 width, it's $1,000. I also do daily credit spreads that are longer dated, not 0 DTE. And those are 5 width spreads. So those you only need about $500. And it's minus the credit you take in. So it's actually a little less than that.
Pretty good. All right. Well, hopefully some of you guys jump on the deal for the Covered Strangles or do payment plans for some of the other services that's offered on thetatraders.com. Really worth it. We have probably the happiest community that I've ever seen. And I'm involved with quite a few other communities, dozens and dozens, really. And the Theta Traders people are some of the happiest people I've ever seen in a service, because of the huge value they're getting from the whole thing. So definitely check it out. And yeah, I think we can wrap it up there. It looks like the questions have kind of died out. So
all right, sounds good. Got any questions, let me know. And I get these questions all the time from my members. So if you do join, feel free to ask me any questions, and I definitely want to help.
All right, guys. Well, thanks for your attention. Thanks for all the good questions. And hopefully we'll see you inside thetatraders.com if you're not already in there. And enjoy the rest of your evening.
Have a good night, guys.
All right. Thanks.